Hawkish bets on rates are moving higher, and ECB Council member Klaas Knot says he expects a hike as early as October. Now, he's no dove, so that's not a huge surprise. But last week, the ECB made a hawkish pivot with President Christine Lagarde no longer excluding a rate hike this year. Let's get more with Christine Aquino, who helps lead our markets coverage. And the story, certainly in Europe, is all about rates, Christine.
Absolutely, Matt. We're seeing a major repricing in these money markets, particularly for the ECB. I think especially because the ECB prior to last week was seen as the furthest away from this prospect of rate hikes. You might remember that before last week, we saw commentary from ECB Governing Council members, even in January and in the early days of February, saying that, they're really not looking at rate hikes until 2023. That all went out the window last week. We saw an indication from them that they're not going to be ruling out a rate hike this year. Now, the big question is, of course, when they're going to fire that starting gun on rate hikes and how fast they're going to go, both on the tightening cycle and also in terms of their asset purchases.
Yeah, and so good morning to you, Christine. If this is all about nervousness about just how quickly we get then this move from the ECB, interesting to ask what that does to the periphery of Europe, because that's where we seem to be seeing the market reaction quite extreme this morning. The BTPs, the Italian debt products, but also over in Greece. Are you worried more about that on the sovereign side, or is it the spread widening we're also seeing in European corporate debt, in the high yield and also investment grade?
Well, and I think these are things that we should all keep an eye on, both on the credit side of things and the periphery side of things. These, of course, are the more risky parts of the European debt market and potentially more vulnerable to a faster pace of ECB tightening if we do, in fact, get there. And so very much keeping a focus on those Italy spreads, those Greek spreads, and those corporate bond spreads. These will be kind of at the front lines of any violent reaction, especially if we get faster than expected ECB tightening cycle.